done. Right, so I'd like to start off just by outlining the structure for today. I'll begin by introducing Mr. Paul Cooley from Workplace Strategies, who will be leading the presentation today. Paul will then take us through his presentation, which will be covering three main components and will make up the majority of today's presentation. And then following his presentation, we will run through a 15-minute Q&A session. Some quick housekeeping rules on my side. This is a Wesgro facilitated webinar. The information, regulations, and statements here intend to support our stakeholders. Whilst we provide the platform for specialists to share knowledge, the views are their own and not those of Wesgro. The meeting today will be recorded and placed on the www.supportbusiness.co.za website, should you need to review it at another time. I want to note that all participants will be placed on mute for the duration of the webinar to ensure no interruptions for the speaker. But if you do look at the toolbar below the video, you'll be able to see a Q&A function. Please use the Q&A function to raise questions. I'll then pass these questions on to Paul at the end of the session. If we aren't able to get to your question during the Q&A period, we'll seek to review it and respond to your question directly after the webinar. There's also a chat function. I'll be posting some of the information I've just provided now in the chat function, but please use the chat wisely, use it for constructive purposes if you can. Thank you very much. And so without any further ado, I'd like to introduce Paul. Paul's professional life started as an attorney in Australia in 1995, acting in industrial relations matters for trade unions in the construction, forestry, mining, and transport industries. He then worked for a very different type of clientele, one of Australia's most high-profile employer labor law firms, where his clients were typically publicly listed or entrepreneur-owned companies seeking innovative solutions to labor law challenges. After a stint in the United Kingdom, working with a Fleet Street firm, Paul returned to Australia and continued to advise on employment law issues, industrial relations, and human resources. Marriage resulted in Paul relocating to South Africa in 2005, where he set up Workplace Strategy CC. Paul, it's a great pleasure to have you involved in the webinar today, and then the very first of our business webinar series. So thank you very much. I know that the topic you're speaking on today is a huge topical issue. I saw some statistics yesterday around the fact that the UIF in a short period received, I think, 39,000 inquiries, of which only 150 odd were approved. So there's a big problem. Unbelievable. So there's obviously a big challenge here around how people are going to try and apply and get through this process. And so I think with that background, really over to you. Feel free to start sharing your slides. And over to you. Thank you.
Well, firstly, may I just say thank you for the opportunity to speak to you. I'm going to share a screen with you now and just sort of touch on some of the issues that I'd like to traverse today. And I think that there's really three things that we should address. Firstly, the appropriate responses for employers as a result of both the COVID-19 virus and more particularly the government's national shutdown. So we'll unpack some of the appropriate responses and actions that employers can take there. The second thing I'd like to touch on is some of the government schemes that have been put forward to assist employees and effectively compensate them as a result of the shutdown. I should say, just on that point, our focus as labour lawyers is very much around issues pertaining to the employment. So the one thing perhaps I don't have the expertise or knowledge to really speak too much about is the various funding schemes. So our focus is more on what the government is doing in relation to compensating employees as opposed to the various business funding. And then the third matter I think I'd quickly like to touch on is a bit of an overall or an overview of the law around redundancies. I'll talk a little bit about the required processes should they be necessary for employers, and also what the likely payments are. And then James, with your help, we'll open up the floor to some Q&A. So let's get into the first of the issues then in terms of employer responses. Essentially, we've been advising clients that there's probably 4 different outcomes or proposals that they could put forward. The first is something called short time. This is a very well established legal principle. It effectively means that for a temporary period of time, employees will have their hours or days of work reduced with a consequent reduction in their salary. So for businesses that are able to carry on during the shutdown, where there's ability for things like remote work, etc., then this is a possible solution or response from employers. Typically, we've been seeing the proposals are that employees work 50% of their normal load and are therefore paid for 50% of their normal salary. It must, of course, be a temporary outcome. To be fair to employees, it's not one that can go on indefinitely, so it does need to be ring-fenced somewhat in terms of how long it's going to last for. The second possible outcome we see is something called temporary layoffs. And this is a phrase that we see the Department of Employment and Labour starting to now use and adopt. It's made its way into some of the legal documents in support of the government schemes. Quite simply, it means that employees will not work for the period and therefore will not be paid for the period. As you might imagine, it mostly applies to employers who have to close their businesses during the shutdown. So the many restaurants and other companies who are unable to trade during the shutdown, this is invariably their best course of action. And I'll come a little bit more to the legalities around that. The third option we've put forward there is a reduction in salary. So we see many employers, even if they can or cannot continue to do business and trade during the shutdown, are approaching their employees to say, will you agree to have a temporary reduction in your remuneration? You will see in the media there's quite a number of the large corporates who have already taken that step in an effort to save some money during a period where they would have reduced or at worst nil revenue during the shutdown. The third option is for employees to take annual leave during the shutdown period. There's been a lot of debate in the media in terms of whether an employer is entitled to compel or enforce employees to take annual leave during the shutdown. To be honest, I'm not entirely sure why there's been such a heated debate. In my view, that the law is quite clear. The Basic Conditions of Employment Act, I think it's section 25, says that annual leave is taken at a time that's agreed by the parties or as dictated to by the employer, providing they comply with the other provisions of a section. So in our view, there certainly is a legal right to require employees to take annual leave during the shutdown. Equally, my uncertainty about the debate also rests on the case that if any of the other 3 options that I've outlined above are put to an employee in terms of what might happen to their pay during shutdown, then all of a sudden the paid annual leave option seems one that I would imagine all employees would be reasonably happy to agree. Because unlike the other 3 options, it's the one option which would allow them to be carry on with their normal salary during the shutdown period. I've made a reference there to some employers being covered by bargaining councils or sectorial determinations. Just let me touch on what we mean by that. Many industries have bargaining councils. They are organisations that oversee terms and conditions of employment in a particular industry. So, for example, there's a very active bargaining council in the building sector, in the metal sector, and many others. For employees who are covered by these bargaining councils, there is often what is called a collective agreement, which again are terms and conditions that apply in that industry. And often in those collective agreements, there are legal entitlements to implement things like short time. So certainly employers need to understand whether they are in an industry that has a bargaining council, because it certainly will guide their entitlements to implement things like short time. Equally, some employers are in industries that have what's called a sectorial determination. This is a document or instrument that is released by the Minister of Labour. And again, many employers covered by sectorial determinations also have a legal right to implement short time. It's certainly not in all sectorial determinations. There is nothing, for example, in the retail sectorial determination or the hospitality sectorial determination that governs or regulates short time. But it's certainly an inquiry that every employer should make to understand the legalities behind their decision. Which of course takes us to employers who are not covered by either of those instruments, or who are considering the temporary layoff and the reduction in salary. All of those outcomes are, of course, a unilateral change to the employment terms. As you can imagine, in normal times, employers do not have the right to say to an employee, I'm going to impose a 50% reduction in your salary. I use the word normal times quite deliberately because we are certainly in extraordinary times. So I think it becomes an issue or a question about whether employers actually have a legal right to implement short-time temporary layoffs and reductions in salary. What I can say to employers is you certainly have an obligation to explore alternatives to redundancy. That is a very well accepted legal obligation. And of course, those solutions that we're proposing, the temporary layoff, the reduction in salary, and the short time, are all efforts to avoid redundancy. So the one perhaps comfort I can give you from a legal point of view is that you would look to the redundancy laws as a reason as to why you would propose those solutions as opposed to redundancy. For employers who have taken those steps, we have been saying to them, if you're going to reduce salaries or any of those other solutions, then where possible, try and obtain the consent of the majority of employees to do so. So that requires some sort of consultation or voting process even. In our experience, the employers who have taken those steps have found quite a positive response. I think there's an understanding from most employees that the issues faced by employees as a result of the shutdown is certainly through no fault of their own. It's an external factor that has been we've had to endure and suffer. So I've yet to see an employer who's taken the trouble of seeking the consent of majority employees not to get that consent. In every instance we've dealt with, a majority of the staff have said, yes, okay, I consent for a temporary period for a reduction in staff, in salary, or all those other solutions I've mentioned. For employers who say, well, I haven't got time or the right facilities to obtain that consent, the one thing we do encourage them to do is at least give notice to employees. In other words, say to employees, look, we need to take these steps. We need the temporary layoff, the short time, or the reduction in salary, and we're intending to implement that in 1 week or 2 weeks. In other words, I think to be fair to employees, we shouldn't retrospectively apply those solutions or decisions. In other words, we're at the 17th of April today. I don't think it's terribly fair to say to employees today that you're going to implement one of those solutions and it will take effect from 1 April. In other words, we need to look forward rather than backwards. I think all of us realise that the challenges and the problems that go along with those steps, the short time, the temporary layoff, and the reduction in salary. I don't think anyone is blind to the issues that puts on employees to have something like a 0 or a 50% of their normal salary. And nobody, I don't think, should try to paint an overly positive picture here, because it's a tough step for all parties. However, there is some positive steps that perhaps employers can raise when they're introducing these conversations. One of those, of course, is that if there's a reduction in salary, there may also be a consequent reduction in the taxation that someone is going to pay. In other words, if my salary goes from 20,000 Rand to 10,000 Rand, then that would put me in a lower tax bracket, and I'll have some cost savings there in terms of PAYE that's deducted. Equally, there are some costs that go along with things like short time. If, for example, post-shutdown, I'm only required to attend my workplace on 3 days per week as opposed to 5 days per week, then I'll have some savings in terms of my transport costs. Again, I think it's useful for employers to point out those positive steps, but equally we need to be understanding and clear that these decisions we're making are difficult for everyone. The other thing, of course, employers can say in terms of any of these 3 or 4 responses is that in addition to those steps, that they'll also monitor and apply for any compensation that the government schemes might grant. And I think it's probably a good time for me now to turn to those schemes. Initially, we thought we had 3 separate schemes announced by the government. The first was something called the National Disaster Benefit Scheme. It was to pay employees a flat rate of 3,500 Rand per month. This scheme seems to now have been absorbed by another scheme called TERS, which I'll come to at the moment. So we initially thought there were 3 possible schemes. Through further information released by the Department of Labour in the last 2 weeks or so, we understand there are 2 schemes, and I think we can put the National Disaster Benefit to one side. The second possible scheme is something called a return to work claim, which is certainly managed under the umbrella of the Unemployment Insurance Fund. This is a scheme that employees make their submissions. It is different to the other scheme that I'm going to touch on, being the TERS scheme. The TERS is something that employers submit. This one here, return to work, is something that employees submit. It's available for employees who are not being paid or are receiving partial pay during the shutdown period. There are a number of forms that are required. You can see I've listed 4 there. There's the UI 19, the UI 2.1, the UI 2.7, and the UI 2.8. Some of those require the involvement and cooperation of the employer. So that UI 19 and that UI 2.7 is something that the employee will have to get from their employer. The employer has to fill in those documents and provide them to the employee. Importantly, to claim from this scheme, any benefits paid will come off any credits that the employee has with the fund. So as you might imagine, when an employee and his or her employer contributes to the UIF fund, it builds up credits over time, which can be later utilised by that employee. Importantly, and unlike the TERS scheme that I'm going to speak to you in a moment, if employees use this return to work, then it will see the deletion of their UIF credits over time. And finally, as you can see there, the maximum amount of benefits that will be payable under this return to work scheme is 6,730 Rand and 56 cents. That applies for any employee earning over 17,712 Rand. There is a sliding scale that the UIF will apply depending on your rate of remuneration. And so if an employee is earning less than 17,000, they'll be paid a higher percentage in terms of the benefit, but it might be an amount that is less than 6,730 Rand. Let's then turn to what probably become the primary or the dominant scheme in terms of compensating employees. It's been referred to as as TERS, which stands for Temporary Employee Relief Scheme. TERS has actually been around for a long time. It used to be handled by the CCMA and was often a scheme that was proposed as part of a redundancy program. It's now been almost repackaged as a response to the COVID-19 virus. As I mentioned, it's an employer submission. So importantly, employers will submit on behalf of their employees seeking benefits and payments from the UIF fund. It is for employees receiving both no pay during the shutdown and also partial pay. I put an asterisk there because in the first iteration of the law around COVID TERS, it suggested it was only available if the employer was receiving no pay during the shutdown. But things have changed now, and the department are allowing people to apply and receive benefits even if they're getting partial pay. There are a number of different documents required as a part of the application process. One of those is a letter of authority, so there needs to be somebody appointed by the employer to manage the process. There is also something called a memorandum of agreement that the employer needs to agree with the UIF. There are in fact 5 different versions of that MOA, but one main one for employers, the other 4 separate versions of MOAs apply for agreements between bargaining councils and the UIF fund. Again, you can see I've made a reference to bargaining councils there because where possible, they have been tasked with applying for TERS. If a bargaining council exists in that industry, they will receive the money from the UIF fund and then pay out to employees. So in some respects, if there is a bargaining council and if they've entered into an MOA with the UIF, then that bargaining council almost takes the place of the employer in facilitating the payments to employees. So again, it's important that employers understand whether there is or is not a bargaining council that applies in their industry. The initial correspondence we received from the department said that employers had to have a dedicated bank account upon which to receive any monies under the TERS scheme. That has also changed. The first change we saw was the department said, well, it doesn't need to be a new account, but it needs to be an account cleared of any other funds, so we can audit any funds coming in from UIF are properly dispersed. Importantly, another change we've seen as the iterations of TERS have gone along is that the TERS scheme will now pay employees directly. So it no longer needs to be routed through the employer. So we are now questioning whether a bank account is necessary at all if the employer has said it is prepared to allow the employees to receive their monies directly. There are considerable payroll details that are required for a TERS application in a prescribed form. The department have been very specific in the manner in which they want their information, presumably for a faster turnaround in the application process. And that figure that James mentioned earlier, how there'd been 39,000 applications, but only 136 processed. The department said most of the issues they're facing were because employers were not providing information in the format that the department want. Naturally, I think the response there is perhaps the department are asking for the information in a very user-friendly manner if so many employers are having difficulty in meeting the requirements in terms of the format of that data. It requires things like 3 months of payroll records and a few other things. So it's important that employees understand the requirements. I understand a lot of the payroll providers have jumped on board here. Organisations like Simple Pay now have a dedicated automated response or report that employers could use. So again, I think if you run that sort of payroll software, ask your software provider if there is an automated report rather than going through the process of manually submitting that information. Before we leave TERS, it's important, I think, if you want to make use of this scheme, you do that as quickly as possible. TERS will only pay benefits for the duration of the shutdown period. So it's important that you jump on board quickly. I did see some communication from one of the employer organisations yesterday suggesting that the 16th of April was a deadline for submissions. We don't think that's true. We do think that the department is still accepting applications. There is now an online portal that employers can use, which I've outlined at the bottom there on that slide. That's a far easier process than trying to apply via email for that other email address. So if you want to decide which one to use, I would encourage you to use the online portal. We have seen a couple of times it has crashed due to the traffic, but we understand it's up and running at the moment. Again, the maximum amount of compensation that employees will get from this scheme is 6,730 Rand and 56 cents. And again, that'll only apply to employees earning over 17,712 Rand. Many of employees and some employees too are also asking us, when are we actually going to get paid after making these applications? Initially, we were told it was 10 days, then it was 15 days, and then it was 30 days. It's a very hard thing to gauge at the moment. What we're also encountering is that some of the employers who acted very quickly in terms of TERS and submitted their applications as soon as it became available are now being asked to resubmit their application because the information and the forms that the department require have changed. That is a bit frustrating for employers who were early in terms of getting their house in order that they have to reapply. But so be it, and we have to live with the requirements there. Okay, so that's the two government schemes. I've touched on the return to work, which again is the employee-based scheme. I've touched on TERS, which is the one that we favour in terms of the application process and the payments. But please, if you're interested in that, get your house in order very quickly there. and get the information you need and send that to the department. Which takes me now, I think, to the third matter that I wanted to touch on, which is just to talk briefly about the redundancy laws and possible payments. So as you can imagine, most employers are saying at the moment, look, we urgently need assistance with compensation for employees during the shutdown. And we're also gauging the effects of the shutdown on our business now and on our business in the future. And unsurprisingly for many employees, they're saying we have an expectation that we may not be able to retain the number of employees that we currently have. And if that's the case, we need to be mindful and talking about what the laws on redundancy there are. So briefly, the starting point is that the legal name for redundancy or retrenchment, that's the same thing as well, is an operational requirements. In other words, a redundancy arises when an employer's operational requirements change. That can happen for a number of reasons. It can happen if they buy some machinery and say we're going to automate part of our process and no longer need all our employees to do it on a manual basis. Of course, at the moment, the most likely and common reason for considering redundancy is due to finances and financial distress. In other words, the employers are saying, we employ 100 employees, for example, given the effects of COVID-19 and for other reasons, we can no longer afford to employ 100 employees and we must consider the possibility due to a need to reduce expenditure that some employees are going to be made redundant. The process starts by issuing what we call in our trade a Section 189 notice. The Section 189 notice initiates a period of consultation with employees. The 189 notice is very much prescribed in the legislation. There are 8 items that need to form part of the consultation process. They are things like why the redundancy program is being proposed, any alternatives that the employer has considered as a means of avoiding redundancy. That again is where we dovetail with things like short-time temporary layoff and agreements to reduction in salary. The third item for consultation is the selection criteria that the employer proposes. In other words, how it's going to decide who's affected by redundancy and who's going to retain their employment. I think the tip there is for employers is to make sure their selection criteria is objective. So there we look at things like skills, experience, qualifications, and very commonly length of service. So that would be what we put forward to employees as the basis of selecting some employees for redundancy over others. And importantly, the Section 189 notice also has to propose what severance pay the employer is going to suggest. Severance pay or redundancy pay is a special payment that goes in line with redundancy. As you can imagine, because a redundancy arises because of an employer's changing operational requirements, it's deemed as a no-fault termination, meaning it's not the employee's fault that they're caught up in redundancy, but it arises because of the employer's changing needs. And for one of those, and for severance pay, it's one of the reasons there's a special payment that goes along with redundancy. The Basic Conditions of Employment Act says that severance pay as a minimum must be 1 week's pay for every completed year of service. And I think at the moment, most employees are sticking to that formula if they have to propose redundancy. So that's a snapshot, if you like, of the laws and the process that apply to all redundancies. So severance pay is one of the 4 payments that go along with redundancies. The other 3 payments is any accrued salary to the date of termination, any accrued annual leave, and any notice or notice pay that you need to give any redundant employees. So it's obviously important that employers cost the outcomes of a redundancy process and very clearly understand what they'll be in for in terms of payments for their employees. I also wanted to touch on, before we get to that, once the 189 notice is initiated, an employer needs to hold a consultation meeting with the employee or employees. It's important that the attendees or the pool of employees that we're consulting with is everybody who may be redundant, whether they're selected or not. So what I mean by that is if you have 4 technicians and you propose that 2 of them are redundant, then all 4 of those technicians must be in the consultative pool and receive a copy of the 189 notice, not just the 2 of them that you've earmarked for redundancy. The real purpose of the consultation meeting is to go through that section 189 notice, to answer any questions that an employee might have and to listen to any proposals or ideas that they might put forward to avoid redundancy. It's important that employers understand that employees in the consultative pool have very wide powers to ask for documents that go hand in hand with the reason for the redundancy. As you can imagine, if an employer is saying, I need to make redundancies due to financial reasons, then the employer is also required to prove what its financial position is. So that means that employers can ask for some quite uncomfortable documents, audited financial statements, profit and loss statements, management accounts, and a few other things. So make sure you understand what the legal requirements are there, because for many employees, it's a nasty surprise that they have to hand over some of those documents. Equally, when employees in the consultative pool ask questions or put proposals in writing, it's important for employers to understand that they are legally required to respond to those in writing. So there needs to be an exchange, a written exchange in terms of those issues. I often asked how long this process takes. We generally are comfortable with something like a 7 or 10 day process. And there's really 3 steps in the process. So it's issuing the 189 notice that I touched on. It's holding the consultation meeting, and then it's giving the final outcomes as to who you decide is going to be made redundant. We say it's a 7 or 10 day process because along each way, the employee should be given time to consider what's being put forward, time to propose any alternatives, etc. So if you like, issue the 189 notice, wait 3 working days, have the meeting, wait another 3 working days, and then give the outcomes. But the payments that I've touched on a little bit already, just a reminder, it's accrued salary, accrued annual leave, it's notice pay, providing the employees aren't going to be asked to work out their notice period, and the 4th one is severance pay, for which I've touched on already. Severance pay is a payment that SARS could allow employers to pay to an employee tax-free, so free of any PAYE deductions. There is a process that's required there. The employer has to seek a directive for SARS to give authorization to make the payment tax-free. In our experience, I think 90% of the time, SARS will give that tax directive. The 2 times we see them refusing that directive is if the taxpayer's own tax affairs are not up to date, or if the employee is a shareholder in the company and owns more than 5% of the shareholding. But this can be an important step for employees, particularly high earners, If they can save any deductions from their severance pay, then their take-home pay is considerably improved in their situation. So employers should make sure they understand the requirements there. And then finally, in terms of redundancy, every employee is required to follow 189, which is the process and the payments I've just touched on. Some employers are also required to follow 189A. There are two major effects of being caught up by 189A. Firstly, either side in the consultation can apply to the CCMA for what's called facilitation. A commissioner will be appointed and assist the parties in the consultation process. More importantly, and this is often a shock to employers, if you're caught up by 189A, you have to have a minimum 60-day consultation process, which means the time between issuing the 189 notice and then finally giving notice of termination or notice of the outcome has to be a minimum of 60 days. Large employers mean that you have more than 50 employees and you're proposing that more than 20% be affected. So if redundancy is something that you need to look at, make sure you get advice about whether you do qualify under 189A. It does mean for many employers it can be a long time before they see the cost savings that they're hoping for due to redundancy, if there needs to be a 60-day consultation process. And after that, say another 30 days notice or notice pay, it means employers can wait up to 3 months before they see any of the benefits of the cost savings that they're hoping for. James, I might make a few final comments, but I think now is probably a good time to open us up to Q&A. James, I think you're on mute.
Apologies, and thank you so much, Paul, and thank you very much for the presentation. I think all the other participants will join me in virtually applauding you. Unfortunately, virtual applause is quite quiet, but I'm sure everyone enjoyed that presentation. There are some questions that have arisen, so we're just going to work through the questions from top to bottom, basically in the order that they arose. And so, Paul, without much further ado, I'm going to put you into the hot seat and start with the first question, which is from Tanya Brand. Option of taking annual leave. Will it be proportionate to full entitlement for the annual leave cycle, seeing that the employee might not have accrued full entitlement for the year, or is full entitlement allowed, bar those days already taken within the cycle prior to the lockdown?
Yeah, I think I understand that. So if there's not enough days accrued, if the employee doesn't have enough days owing, one option for employers is to allow employees to go into what's called annual leave debt. So let's say I need to take 20 working days off during the shutdown and I have 10 accrued days, then I would come back after the shutdown owing my employer 10 days. I'd be 10 days in debt. And of course, over time, the employees will catch up and come back to a zero balance. So I think if I've understood the question, I think that's the appropriate answer. One thing in terms of annual leave, if that's granted, in my view, it must be on full pay, on normal pay. I wouldn't think it's fair to say to an employee, well, you're going to be on annual leave, but equally, I'm going to only pay you half the salary which you normally would have received during your annual leave entitlement.
Perfect. Thank you very much, Paul. Moving on to the second question we received. This is from Gary van der Vat. Should UIF not be approved, can the company pay employees applied for not working at month end and recover funds once UIF is paid?
Yeah. So as I said, initially the TERS scheme was if you're partially paid, you don't qualify. That's now changed. So it still will, it will top up employees who are receiving some of their money. You are required to disclose to UIF the remuneration you are paying to employees during this period. But what Gary is asking is probably what we're going to see in terms of further change to this process. We hear the department is saying to employers, well, in actual fact, you pay the employees for this period and you can claim back anything you paid from us at a later date. One of the other questions we're asked is, what if I give my employees a loan during this period? Do I have to disclose that? I think it's important, obviously, that any information given to the department is true and accurate, and please don't do otherwise. Equally, however, the requirement is to disclose remuneration paid. In my view, from a pure point of view of looking at what remuneration is, I don't think a loan qualifies as remuneration. Remuneration is an employer paying the employee. A loan is a repayable payment. So that might be an option for employers if they feel comfortable in doing that.
Great, thank you very much. Moving on to our third question, which comes from Jill Dehan. We plan to reopen our factory and go to short time straight away, 20 hours a week instead of 40 hours, as our order book is low. If we need to retrench a worker during this time and give them 4 weeks notice, will they only be paid short time during that notice period? Is that permissible?
Yeah, so a common question, and I don't have the answer to that, to be honest. If you'd asked me the question before COVID-19, I would have said, no, he's entitled to his normal pay. Look, I think there's no legal answer to that other than if an employee is working out their notice period, then generally they should be paid their full salary. Personally, I think if you're reducing the pay of somebody who's about to lose their job due to retrenchment, then it's almost a double whammy, if you like. So I think from a fairness point of view, unless you're sort of looking at insolvency or something like that, then I would really encourage employers to try and find the money to pay employees if those payments are arising because the employee is losing their job due to redundancy.
Great, thank you. Just before I move on to the next question, just to note, I see some people are putting their questions into the chat. If I can just encourage you to add your questions to the Q&A as well, just because the Q&A box allows us to work through the questions more methodically. Thank you. And so moving on to the next question, this comes from Eric Baruch. What government scheme, if any, covers income for employees in a temporary layoff scenario post-lockdown? That's from Eric at Gold Sun.
Good question. At this stage, none. I'm afraid look, I think certainly TERS, they're very clear that they'll only pay during the shutdown period. I think perhaps the return to work scheme, which I touched on, that there might be a little more room for payments post the shutdown. That 2.7 form that I referenced, which is the one that employees fill in or complete to get the return to work payments. If you look at the form, it also includes things like parental leave and maternity leave, etc. So things that happen during the normal course. So I couldn't guarantee it, but I think there's a far greater scope for that return to work scheme to compensate employees post the shutdown.
Great, thank you, Paul. The next question is from Michelle Holtzhausen. Just to confirm, for companies with less than 10 employees, no MOA is required for TERS application.
Yeah, that's right.
Okay, easy, yeah. Easy.
Yeah. I should say that I mean, initially all these TERS applications were being sent by email. It was obviously a lot of congestion in terms of the department's service, etc. If you experience that, often the mails wouldn't go through. The online portal, even though it has crashed a couple of times, is a far easier process. and it automates a lot of the documentation. So things like the letter of authority and the MOA is a far easier process through online portal.
Perfect, thank you. The next one's also, I think, a confirmation case. This is from Dayalan Naidu. Payment direct to employees in a case of less than 10, payment to employer in a case of more than 10 employees.
Yeah, so the department very much said that they'll pay directly for less than 10 employees. But look, many of our clients who have far more than 10 employees are also selecting the employee payment option. In other words, the monies aren't going to come through them, just for, I guess, to hasten the process and to allow employees to actually receive some payments sooner. Perfect.
Thank you, Paul. The next question comes from Kevin Ruck, who did indicate that he missed some components of your presentation due to some signal. So I'm giving you a bit of background and then the question. So I employ 17 people in the agricultural industry. I've undertaken to try to retain all my staff and have been paying full salary even though we've reduced time to 20%. Must I stop paying to claim TERS, or can I continue and then claim retrospectively? By paying them, have I inadvertently penalized the company in that those weeks are gone?
Yeah, look, the government have come out and said to employers, pay your people if you can. Equally, particularly with businesses with cash flow issues, I think, for their own longevity, they should be making use of the government schemes to compensate employees where possible. So I think, in my view, if I was an employer, I would be structuring my arrangements such that my employees can get the benefits from the government schemes, and I'll look to see ways of trying to help them and top up any payments over and above what they might receive. So I think, we're at the 17th of the month. I assume April payroll has not been processed yet, so there is still time to take some action there. But certainly, if the employees are receiving no reduction in their salary, then they won't receive any benefits under TERS. TERS will not pay over and above their ordinary salary.
Perfect. Thank you, Paul. Just noting as well, Kevin did ask, and this is more for me, is it possible to email me the transcript if there is one? Kevin, just to advise that what we are doing is we're recording this session and we will make the session available to attendees. What I would recommend is that if you don't receive a recorded version of the session, or at least a link to it in the next couple of days, you can just send through an email to us, and that email is supportbusiness@wesgro.co.za. Right, Paul, moving on to the next question, if that's all right.
Before we get to that, I'll also happily share the slides that I've gone through today. We've also put together a document in terms of TERS applications, some tips in terms of things we've learned going through the process and making the application. So again, I'm very happy to share that to your participants today.
Fantastic, thank you so much again. The next question comes from Gary van der Vat. What period will TERS apply? Our industry will probably only start to recover 6 months from now. In that scenario, an SEC 189 process would presumably be required once the TERS term expires. Any advice? The most beneficial route for employees? If you want me to go through that again, just let me know, Paul.
Sorry, I just got it. Yeah, if you wouldn't mind, thank you.
No problem.
I'm the only one, but I didn't catch all that.
Okay, no problem at all. Let me go through it again. So this is from Gary van der Vat. His question is, what period will TERS apply? Our industry will probably only start to recover 6 months from now. In that scenario, an SEC 189 process would presumably be required once the TERS term expires. Any advice would be appreciated in terms of the most beneficial route for employees.
Yeah. Okay. Look, at the moment, the government said TERS will only apply to the shutdown. I would imagine they'll release further information in terms of compensation schemes post the shutdown, but we don't have any indications or information about that at this stage. But I think, you know, forward-thinking employers should be getting advice about redundancies now and doing their forecasts, etc. I certainly don't want to encourage people to lose their jobs. That's not at all what I'm suggesting, but you know, for the survival and longevity of the business, I think every employer should be looking now and doing those forecasts and seeing, you know, trying to predict what's going to happen in the future in terms of revenue and all those other things.
Absolutely, yeah, that certainly makes sense. Right, the next question is from an anonymous attendee. Luckily, doesn't seem to be a hacker though. The question is, does the CCMA facilitation only apply to employers with more than 50 employees? Yeah,
it's a 189. That's right. Yes, 189A.
Okay, perfect. The next question is from Clive Bradford. Hi, Paul. For how long post-shutdown can short-term be applied? Temporary layoffs, does this apply post-shutdown, and for how long? On redundancy, are Zoom consultation meetings an option - legal? So I think there are two questions in one there.
Okay. Well, firstly, if it's the Clive Bradford I know, hi Clive, it might be a different one. Let me answer the question. Look, I guess the ability to implement short time, again, we have to go back and say, well, do we have a collective agreement, or is there a sectorial determination that actually governs and regulates short time? Because many of those documents will have limits for how long short time can be applied. For employers who don't have those instruments, I mean, it's a grey area already whether they can apply short time, and being a grey area, I guess there's no rule. There's no, you know, I get this question a lot, and I'm saying, well, I can't tell you that because, you know, there's no law for you saying you can implement short time in the first place. But what we do know, of course, is the obligation, the legal obligation to explore alternatives to redundancy. There was a second part of that question there, James.
Yes, that was very quickly again on redundancy. Are Zoom consultation meetings an option - legal?
Yeah, so I think that's the third part. The second part was about temporary layoffs. I don't think that should carry on past shutdown. I think if an employer says, I have no work for you and I can't pay you, then we have to look at redundancy. The third part, in terms of consultation meetings on Zoom, absolutely. We're doing them on WhatsApp conversations if the person has no internet access, etc. So I think providing you can show that there was a discussion, that the parties went through the issues in the 189 notice, then there's certainly no problem with video conferencing. And of course, given the shutdown at the moment, it would really penalise employers if they had to wait until we came back for a face-to-face meeting.
Thank you. Well done, Paul. That's 10 questions answered in quick succession. There's a few more to go. And obviously just conscious of time, I think, you know, we did say we'd extend a little bit over the time. So just getting through the last few questions if we can. This one is from Tanya Brand. TERS is paid up to 3 months. If an employer chose to pay a guaranteed 13th check during the lockdown, say it was normally due by the end of the calendar year, and applies for TERS, how will the payout of the 13th check be viewed by UIF, and how does this impact TERS payment at a later stage?
Yeah. So I think the 13th check would obviously be seen as remuneration. That certainly falls within the definition. So the benefits that the employee would get might be reduced because of the fact they are receiving some remuneration during the period. Look, there's some very complicated tables I can show you to try and ascertain exactly what the benefit is. But for most employees, it's a top up unless they're high income earners.
Perfect, thank you. This one is a shorter question from Jaco Loubsche. How do you go about claiming back monies paid on later basis, and will there be funds left?
Money's paid on a later basis.
I'm not certain whether to assume that that would be, if you're paying now and then you want to claim back from TERS, which is one you have handled.
Yeah. So look, at this stage, there is no facility to do that, but we're predicting that might be the department's next step, probably because of their issues in terms of processing these applications. But as it stands now, if the employers are receiving the entirety of their normal salary, then they won't receive any TERS benefits, and there's no capacity for the employer to claim back from the UIF fund.
Thank you. Right, the last question on the live Q&A that we have, and then I'll move to just one more on the chat, and then I think we close questions for this session. But if anyone has any additional burning questions, then please do send them through to supportbusiness@wesgro.co.za so that we can handle them. But the last of the official Q&A questions is from Haijo Koelke. Must the employees' bank accounts be in their own names, or can they use an account in a third party's name for UIF payments? That's part A of a two-part question. So maybe you want to address that first.
Yeah. Okay. So that's one question I'm yet to get. So well done. I thought I'd heard them all. I don't see why not. At this stage, and the other question I get about bank accounts is, if you do an ordinary UIF submission, then you have to complete what's called the UI 2.8. That's one of the forms I spoke about. And that requires verification of the bank account. In other words, the employee has to have a bank stamp saying, yes, this is the employee's account. Now, for TERS, we don't see any suggestion that that's the case at the moment. Pretty much the account that is specified in the application, we believe, will be the one receiving the funds, and there's no obligation to verify that it's your account. The one exception, though, I think, is with bargaining councils, because invariably they already have the employee's bank account details, because often they pay things like holiday pay and some other benefits into that bank. So if the employer is covered by a bargaining council and the employee wants to use a different bank account, then that employee will certainly have to change the details with the bargaining council.
All right, let me bring up part two, which is, must the employees be South Africans or permanent residents of South Africa, or do they also qualify if they are acknowledged refugees from another country?
I can say to you that it isn't a problem if you don't have an ID number. So the application process will allow things like passport numbers in lieu of identification numbers. So that probably suggests to me that if you're not a citizen, then you can still receive some benefits. That's probably about as much guidance. I certainly haven't seen any exclusions because of refugee status, etc. And I think there'd be a lot of pushback if the government tried to say refugees shouldn't be receive these benefits, given often perhaps they're the people who need them most.
Right, Paul, moving on to the very last question of the day. This is from Cheryl Parwater. On the question of paying salaries in full and claiming TERS retrospectively, would government not find it in bad faith if a company is audited and it is found that they could afford salaries at the time, yet claim TERS?
Look, unlike TERS is a bit different to a lot of the government schemes that employers might apply to for funding, which require disclosure of financial documents, some proof of financial distress, etc. There is the possibility that the department could ask employers for that. The MOA makes some reference to that possibility, but as it stands, if you apply for TERS, you don't have to hand over your financial details to justify why your employees should receive benefits. I don't think that the department is going to do what's suggested here and do an audit to see whether the benefits the employee could afford to or not. I think that particularly the department will have to accept it from the employer that they needed to implement the temporary layoff or the short time, it affected the employee's salary, and I think that'll be enough.
Fantastic. Paul, just first of all, to compliment you on your quick fire responses to 15 questions. You've answered them all, so thank you so much. And further to that, thank you again for joining us on our very first business webinar session. I hope that all of the participants found the session productive. And again, I'd really like to thank Paul Cooley from Workplace Strategies for taking the time this afternoon to chat to us. I think just in terms of some housekeeping, as I've mentioned before, this session is being recorded, and assuming that the technology works fine, we should have this session sent on to you in the next 24 hours, hopefully. So once again, to everyone today, I'd like to thank you so much for your time and wish you all a happy weekend. Stay safe.
Thanks, James.
All right. Thank you. Thanks, everybody.
All right. Bye-bye. Cheers, everyone.
Bye.